All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. Market's been open here for just a little bit. I do have a sell order ready for IBM. I may pull the trigger here on it. I'm going to give it just a little bit more here with it. You can see the market this morning, S&P futures, just not a whole lot in them. We had this jump right here, at about 8:30 my time, and, that's kind of given up, and that whole move here was about 10 points. But overall, not a lot of volatility out there. In fact, this is backed out. The S&P futures backed out. And just kind of compared to yesterday, right? Still trading within the range of that last hour from yesterday, where we saw, monies come in on some pretty okay volumes. Nothing too, fantastic there, but just kind of some okay ones. But again, you want to see where the market is. You want to see if the market's up or down. Just pull up Apple, right? Apple's down 230. What's the market, right? I mean, it's one of those Apple up, Apple down, market down. And, I think we're going to continue to see that, even though the news isn't specific on Apple. But I think we're going to continue to see that phenomena. We're going to continue to see that effect because of how fund managers are involved with Apple. And, especially after this, heavy sell-off that's been. But most stocks are kind of performing like Apple today. They're trimming back some of the gains from yesterday. Some of them opened up a little bit higher early on, like Apple, because they saw, we had some residual buy orders from the close yesterday that didn't fill. So we saw some of those things come in. But a Freeport-McMoRan, same type of action. Just this kind of little bit of fade of yesterday's rally. We see things like Under Armour in that same position. These aren't bearish positions. In fact, this is kind of a common sight to see after a big update, right? But the question then becomes is, okay, are these just pullbacks to be bought? Like right back here in, let me get my drawing tool here. It's not coming up. I'll just circle with my mouse, but right here at the end of October, you can see big up day, next day, a little down, and then that move higher. You see big update kind of right here, back above the 7 here, middle October, then has a day like today, and, gets that further down tick, right? So there's not a overwhelming, well, this type of day means it's going up, but it's not necessarily a bearish day. We can see plenty of these types of days where, okay, the next move was significantly higher. So it's really a holding pattern, for a lot of investors, for a lot of traders. It's one where we tend to see implied volatilities contract when this happens. But en masse today, that's not what we're seeing. The VIX today is up 10%. I mean, you think about yesterday, the market up 60 points. The VIX barely budged lower. Today, the market down, what's it down now? 10, 12 points. All right, it's down 16 points, right? So it's giving up 25% of yesterday's gains, and the VIX is up 10%. If you're bearish, you point to this and say, hey, you know what? Investors are very fearful about this weekend and about the end of the month here that we're going to see, tomorrow when it comes to, the trade and okay, are investors going to have to sell into the end of November? And so it's one of those where, overall, bears definitely have a few advantages. We talked about some of the overcooked hourly charts yesterday, which is why I didn't add more than just what I had with IBM. And, those are kind of starting to come on down. I mean, you take a look at an Under Armour, right? The hourly chart's starting to look a little bit different, right? Here we are. Let's see if it'll come up. But you see that fresh break of the 7 hour, Okay, so it tells me I don't need to get in right here, but I can wait this little mini sell-off out. Does it come to 22, 22.50, 22.25? It can come to any of those levels, depending on the overall market. But I don't have an oversold. I don't have anything, there. So I'm just looking for a higher low in the next move back above the 7-hour, to get in. So nothing really for me to do with it, here this morning. I'd like to be a buyer at Bank of America. And it's very similar action. If it'll come up here, sorry, it's been a little bit slow. Not sure why. All right. There we go. All right, but you can see Bank of America hourly chart here doing the same thing. That move back below the 7-hour, starting to come into play. And we're just seeing that across the board. And, I mentioned yesterday with IBM, when we start to see it come below the 7-hour moving average, it's probably something I'll just look to take off and move on. And that's what we're seeing right here, right? We are seeing IBM start to come back below the 7-hour moving average. Now, me getting out could be a whipsaw, right? Could be like Apple was, and could be a very easy whipsaw. There's nothing in the daily chart that tells me, hey, you know what? You got to jump out of here and move on or anything of that nature. But the way I'm going to trade this challenge and the way I'm going to, to jump around here with it is much more dependent on hourly chart than daily charts here. So here's IBM. We can see it, kind of making this move down here to the 121.75 area. We're seeing it bounce just a little bit here. Let's see, the options going for about $1.95. So I'll give it just a few moments, see if it doesn't snap back right here. But it's starting to break that 7-hour. And so probably time for me to, just take it and move on, take a small loss. We had a little bit of gain come in after yesterday's move. And so this would be a small loss if I have to exit it right here. But going to give it just a little bit of a chance to potentially bounce just a bit here. Maybe back to this 122.10 area, maybe get a little bit better fill. But you see across the board, it's red. It's pretty red. If you look at the stacks, as far as the sector stacks, it's a bearish stack if you just look at it independently. Industrials are down. Consumer staples are up. Energy, which, is beat to its own drum completely, is barely up with oil up $1. That's pretty ridiculous. We have consumer discretionary, which is lagging today. Utilities, which are down. Normally those are going to be up on a day like today, but we're not seeing that. Even with the bond market pushing on higher. Tech is the big laggard here, along with financials. So it's a fairly bearish stack. In terms of how it's, stacked on up here this morning, and one that, it's in the context of this morning, yes, a bearish stack. In the context of the last several days, no, you can't look at it and say, oh, well, this is just changing everything from the last few days, because frankly it isn't. But this looks like, a very no catalyst market this morning on the open. And, end of month action with fears of trade war, looming for the weekend, just kind of sitting in and really just not seeing a whole lot of real concrete type buying dip into this market here. So let's see here. Create closing order here, $1.86. See what they're going for, $1.85. I just put a limit order here for $1.85. And I'm out at $1.86 on IBM. So I gave up my gain from yesterday, and I'll probably end up with a $80, $90, $100 loss somewhere around there. So not much to write home about with it. Let's see. So out of IBM at $1.86. And again, I mean, this is just an hourly chart breaking below that 7-hour. Time to go. and I'll look to revisit it, look to pick it up again. Ultimately could be a whipsaw, but I'm not willing to take that chance in this environment that we are sitting in right now, and with where some of the implied volatilities are, and with what it does cost to ultimately hold something. So this should probably put the challenge right around $3,000. Let's see here. Yeah, 29.89. So we've chopped around with some trades here. We've lost. I'm not sure what the new number is after IBM. I don't think we lost any implied volatility with IBM. I know we lost a little on implied volatility with FCX yesterday. I think it was about $80 there with it. So that would bring our implied volatility loss on the trades up to around $1,300, meaning just the implied volatility contraction has equaled a $1,300 bleed in the options this challenge so far. So we've overcome that with the deltas and with the movement in the stocks, and we've overcome the time decay, which is much smaller than the implied volatility decay, which isn't normal. Normally the implied volatility decay is much less than time decay, but we've been able to overcome about $1,700 in loss between implied volatility and time decay. About $1,700 worth of loss. We've been able to overcome it with the deltas, right? So we're getting some movement in our way, but the upside on options in this market has been a little tricky, been a little tough, and it's that environment hasn't changed. That environment is still here. Will it ultimately, change up? Yeah, it will. It will, but then the challenge will reverse, right? We'll have good option values, but the probability of change in the stock will be a little bit less. And so it always swings from one end to the other, for investors. This isn't something where you go, oh man, this is just something crazy. No, this happens a lot. Market swings from one end to the other, one side to the other, in terms of how the options work. And, this is just the side that we're in right now. And it's not a side that keeps me out, but it's a side that makes me a little more tempered, a little more cautious, here overall. Take a look at Micron. Micron yesterday, rallied, right? It rallied and made a nice move, was down, rallied, but has that kind of same action, here to it this morning, that same hourly. And so we can really just kind of go across the board, and we just kind of see the same thing out of most stocks, that are at least on my watch list to be traded. So, nothing that I'm even interested in getting into right here. Later on today, I'll be able to kind of look at these and go, okay, are the hourly switching up a little bit? But as they sit right now, just no real interest in, in buying some of these. Now, I will be very interested in some VXX puts. If this rally, if we start to see the market firm a little bit, but going into the weekend, I do suspect that, these could push up a little bit higher, just fear over the trade war element here this weekend. In fact, I'm not a big proponent of straddles. In fact, I hate straddles. I think straddles are a really fast way to lose a lot of money in a market. Some people love them because they don't have to predict which direction. But, like any strategy in the market, there's a time and a place. And as we go into this weekend with, what's going on, and then we're going to have the front end of the month economic data, a VXX straddle is really interesting. To be, maybe even buying a call spread, the 40 to 42, and then buying a put spread, the 30 to 32, and straddling it with a spread is a very interesting proposition. As we can see several things and several scenarios play out. We can see, hey, things escalate, things get worse. So we see a big jump in the VIX, big drop in the market, and so the VXX soars. Or we can see, hey, there's some resolution and the market just goes up a little bit and flattens out. And if that's the case, the VXX is going to tank. The volatility is going to tank when that event is over, if there is some signal that, hey, things have calmed and things have, been placated a bit. But that's an interesting one. Not interesting enough that I'm in yet. We'll take a look at it. I think you can also play it with the FXI. With the China ETF here, which had a nice move yesterday, right up to the upper band on contracting bands and pulling on back today, which is kind of a normality in terms of what we tend to see around upper bands, but overall, similar to a lot of other things that are out there in the market today. We did see an upgrade on Boeing this morning. A really nice upgrade on Boeing, and it is one of the few stocks out there that's getting a gap up and kind of trading higher than yesterday's number. Most stocks are kind of in that IBM, CSX, FXI, Micron, Apple, type of arena. Okay, so if we do see the implied volatilities calm down, into the close here today. If we see them start to calm down, we see some of the option values really come into play, nicely with some good risk reward, I'll look to jump in. Ideally, I'd like to see, a little bit more bleed, and then, a nice little push above the 7-hour moving average into the close. But, I'm not going to hold my breath that happens here today. I may have to adjust to, to something a little more, something a little different, something a little more variant here. Perhaps the biggest surprise that I have looking at the market open this morning is the VXX element, or excuse me, the TLT AT&T element. Here's TLT, nice move back above 115. This is a pretty bullish move. It's one of those where you look at TLT yesterday and you go, wow, this was down. Some of that was just because money was coming out of bonds to go into stocks, right? And we saw that rotation. But, we see TLT moving higher with AT&T down. This is a very interesting buy position for AT&T, and one that I am considering for the challenge, and one that, the hourly chart, you can see the gap down below the 7-hour. So, I'm not very interested here just yet, but we start to push back above that 7-hour. I start to get, much more interested in AT&T. All right. So out of IBM, it'll probably whipsaw me and rally. We've seen that plenty. This challenge has been interesting because we've had our fair share of things kind of where Pepsi, okay, we got out, and then it reversed strongly to the downside. So we got out a good spot, right? With Under Armour, got out, and the next day it got hit pretty hard early on. But it's then we had Apple, where I got whipsawed out, and yesterday it mounted a very solid charge. So with trading at the pace, the shortness that I'm trading at, the whipsaws and the hindsight elements are only going to be increased, right? It's only going to be a lot easier to look back and go, oh man, should have held that, man. Oh man, should have got out here. There's just going to be more opportunity. But the reality is they tend to balance out. And when it comes to a challenge, or when it comes to even option trading, you've heard me say it a million times, and I'll say it another million times. I'm not interested in tops and bottoms. I'm not smart enough to pick tops and bottoms and every little short-term top and bottom that comes in out there in the market. But I can assess risk reward. I can assess direction. I can assess probability and trade those. And that's what I'll continue to do. Thanks for hopping on. Have yourselves a great one, and we'll talk to you later. Take care.